synergies to our operations. These synergies are in the form of we are able to leverage our procurement, our buying across multiple sites. And we are also able to produce the right product at the right location for our customers. Additionally, we are able to benchmark our various locations. You know, we have 41 sites in the world, and therefore we can bring cost synergies to our group. Having this right cost curve is very important to any business, and especially to a business in commodities. What we have seen is in China there has been a constant build of capacity over the last many years. But especially in the last 18 months, we have seen excessive build of capacity, which has depressed the margins for PTA in particular, which further led to depressed margins for PET and fibers in 2012. So in the depressed or in the bottom of the cycle of 2012, actually our Q1 demand and our Q1 margins were an improvement. As we have seen that last year, quarter by quarter, the margins were coming down, with Q4 2012 being at the bottom of the margins for PTA and PET. But in Q1, we have seen a recovery of margins for PET. I think the reason for this probably is that over the last 18 months, the industry has lost billions of dollars, and therefore all the reserves with the companies may have dwindled. And now there is more discipline. The producers of PTA, PET are taking more care in protecting the margin. Additionally, as we go further in this year in 2013 and 14, there is new paraxylene capacity coming on stream. So with sufficient supply of paraxylene or excessive supply of paraxylene, we believe that the paraxylene margins will contract, and that will further help the PTA business. I'm not saying that PTA margins will go back to the highs of 2010 and 11, but at this moment, the PTA margins, which are below $100, are much below cash cost. So there is possibly an improvement from the current level. And we think over the next 2-3 years, it will finally settle at $150 from below $100 currently. We have seen a small improvement in Q2 as we speak. So IVL strategy in Asia basically remains the same. It is a large market. We continue to grow our market share in Thailand, in Indonesia. We have a PET plant in Guangzhou, in Kaiping, Guangzhou, which is actually our largest PET site. It has a capacity over 500,000 tons, which is now effective, basically. We bought this plant in 2011. We did some debottleneck exercises. We added some coal-based utilities. And now all of those capacities, all those initiatives are complete. And we actually are seeing very good ramping up of capacity in China. Currently, as we speak, we are running that capacity at practically full utilization. So, which is quite an encouraging message for us, basically, because China having all the oversupply, it means that business in China is getting more disciplined. We are obviously helped in China that we have our feedstock, our PTA coming from Thailand, and we also have export markets from China. So being a global company, that's one of the benefits we have, is that we can load our plants better from both domestic revenue and export revenue. As a global company, IVL, basically we are present in, as you know, North America, Europe, and Asia. The two big markets that we are not yet fully present is, let's say, South America and in India, and maybe Middle East. You know, we started our plant in Africa, in Nigeria last year. That plant is loading up quite nicely. We added a packaging business to that plant early this year. So our PET and packaging business in Nigeria is developing quite well and is contributing positively already. South America, we are able to market from our plant in Mexico. Mexico and South America have favorable trade agreements, and therefore we have a good presence in South America served by our Mexico plant. The market that is large and rapidly growing is India. So we continue to look at investment in India. So that is one of our aspirations. So in Asia, our strategy remains that in high, for instance, in Thailand, where the cost of energy, the strong baht, the hike in wages, all have led to higher cost. We are transforming our production in Thailand into more specialty or higher value-added products. In line with that, we announced yesterday a new joint venture project in Rayong at our existing site, with actually an existing joint venture partner with whom we have a plant in Suzhou in China already. But there is an inclination for high value-added products to be produced out of Thailand. The infrastructure in Thailand is preferred by many, let's say, Japanese companies. So, and it suits our strategy, it suits our purpose to reduce the weightage of commodity in Thailand and increase the weightage of specialties. So that project is in line with that. Another debottlenecking project of hygiene fiber is in USA. The USA demand for hygiene in personal care is strong. So we were short of product. We had this opportunity to debottleneck our existing production line in Covington, USA. So it's a low-cost expansion, so that should be very attractive to IVL. Similarly, across the world, basically, in this low-margin environment, what the focus of IVL has been over the last 1 year and continues to be is to improve our cost structure. We will discuss more of this in the presentation as we go forward, but that remains our priority. We have made a specific group led by a president, Mr. G.L. Modi, 2 senior vice presidents, Mr. Ashok Arora and Mr. Mohan. So 3 people have been given this responsibility to implement what we call asset optimization. That means make the plants more cost effective by debottlenecking where possible. And those sites which we call our flagship sites, load them fully. If we have some sites which are higher cost, then we might as well reduce the loading on those sites and cut the cost at those sites, but increase the loading at our flagship sites and therefore overall improve the cost of manufacturing, or what we call overall cost or total cost of sales. So as we grow the blended margin and as we reduce the blended cost, that obviously reflects in our EBITDA. So we are on track of doing that. We are achieving those. We are on track of achieving those results. As you know, the industry of polyester remains very attractive. The growth of polyester is in multiples of GDP growth. GDP itself is growing as per organizations year on year over the next couple of years. Despite that, in China, the growths have come down. I mean, 7% is still a good growth rate, but it's come down from, let's say, 9%. But despite China's slowdown of growth, overall global growth is going up, which is good for every industry, and especially us, since we grow at multiples of GDP. So as per industry pundits,